Welcome to today's market report. Woods version ruled on Monday as a surge in worldwide coronavirus cases pushed down bond yields and left stocks facing their longest losing streak since the pandemic first hit global markets 18 months ago. The Stoxx 600 slid 1.4% and London's FTSE 100 fell 1.3% as England scraped COVID-19 restrictions, even though over 48,000 new cases were reported in Britain on Sunday. Britain's health minister has also tested positive for the virus. Asia had seen Japan's Nikkei and Hong Kong's Hang Seng drop 1.3% overnight too. Cases hit an 11-month high at the weekend in Singapore. Thailand had its highest single-day increase since the pandemic began, and Sydney's construction workers were told to down tools after cases rose there as well. Wall Street futures were down 0.5%, although it was good news for those holding safe haven government bonds or dollars, which climbed to a more than 3-month high. According to NatWest, the chances of broader lockdowns being needed again were growing, and also China's economy was slowing, meaning a recent surge in commodity prices could be peaking, although oil is now expensive enough to be a weight on many economies. The DAX dropped 1.1% and the France's CAC 40 declined 1.3%. The rise in Delta variant case counts may be spreading outside of Asia, and risks now seem to be tilting to the loosening of restrictions in many regions being delayed, hence growth momentum is faltering. Europe's travel and leisure index dropped 2.9% to its lowest level since mid-February. UK-listed shares of cruise operator Carnival plc, airlines EasyJet and British Airways owner IAG fell between 4% and 6.7%. Cases rose to 48,000 in the UK, and in France, a minister said the reimposition of curfew measures cannot be excluded if infections continue to climb. Oil majors like BP and Royal Dutch Shell fell more than 1.5%, hit by falling crude prices after OPEC Plus ministers agreed to increase supply from August. With government bond yields on the decline, other economically sensitive sectors such as mining, automobiles and parts and banks dropped as rising COVID cases raised in prospect of slower recovery. French media giant Vivendi slipped 0.8% after billionaire investor Bill Ackman decided to buy up to 10% of Vivendi's Universal Music Group through his main hedge fund rather than a special purpose acquisition company. Italian telecoms group Telecom Italia dropped 2.2% after it forecasts its organic core profit to fall this year compared to a prior forecast for a stable to low single-digit growth. British video game company Sumo Group soared 42.2% after Chinese tech giant Tencent Holdings agreed to buy the company in a deal that valued at £919 million. Crude oil WTI was down 3.86% to $68.81 per barrel. Brent oil was down 3.48% to $71.05 per barrel. Gold futures was down 0.79% to 1,800.70. On the FX front, GBP/USD has seen a break below 137.34, therefore cable is set to test medium-term support, seen starting at the 200-day average at 1.3697 and stretching down to 136.69, the April low and 38.2% retracement of the rally from September. With England set to lift all COVID-19 social restrictions, the continued spread of the highly contagious Delta variant drew further doubt from investors about whether a total economic recovery to pre-pandemic levels is at all possible. Earlier this week, British Health Minister Sajid Javid announced he tested positive for COVID-19 and was in self-isolation, also forcing Prime Minister Boris Johnson and Finance Minister Rishi Sunak into quarantine. Sterling hit a 3-month low against the dollar, according to Commerzbank. If consumption and production were not to return to 2019 levels, a significant chunk of productive capacities worldwide would not just lie idle temporarily, but would become devalued on a permanent basis. If we're no longer simply dealing with who will survive the corona period, but about whose goods and services will remain in demand long term at all risk. Euro-dollar is trading at new 3-month lows at 117.65, whilst the dollar index was up 0.2% at 92.828. This is today's market news. Thanks for listening. We'll see you next time.